Hello and a warm welcome to Tax File. I am your host, Laure Bala Hassan, and I am thrilled to have you join us for another information-packed episode. We'll kick off with the latest updates from the world of taxation, bringing you the news that matters. In our Did You Know segment, we've got some eye-opening tax facts that might just surprise you. Next up is Vox Pop, where we hit the streets to hear your opinion on some tax topics. Then, in the Knowledge Zone, we'll break it all down and add context to what people are saying. You also hear from our experts on our Professional Insight segment, helping you better understand issues around taxation. And of course, we'll wrap it up with What's on the Net, where we answer your questions and comments from the digital space. It's going to be a dynamic and insightful session. Let's dive right in. And now, the news. Recently, the executive chairman of the Nigeria Revenue Service, NRS, and the chairman of the Joint Tax Board, Dr. Zach Adedeji, delivered the welcome address at the 158th meeting of the Joint Tax Board, held at the Transcorp Hilton, Abuja, highlighting the historic transition from Joint Tax Board to Joint Revenue Board. Ejura Etu Okpanachi has the reports.
He highlighted the historic transition from the Joint Tax Board to the Joint Revenue Board, effective January 1st, 2026, describing it as a major milestone toward a more coordinated and efficient national revenue system. Speaking on the meeting's theme, which is Managing Transition, Driving Transformation, Building the Future of Tax Administration in Nigeria, Adedeji urged stronger collaboration, increased use of technology, and proactive responses to emerging challenges. He also commended tax authorities for their resilience and improved revenue performance despite economic pressures. The NRS chairman announced the unveiling of the new JRB logo and brand identity, as well as the appointment of Mr. Olusegun Adesokan as the executive secretary of the Joint Revenue Board.
Yes. So here is our new logo. JRB. Congratulations to all of us. Thank you. And it shall be a wonderful era to all of us. Amen. Congratulations, Executive Secretary. Thank you.
He called for unity, integrity, and sustained commitment as Nigeria enters a new era in revenue administration.
Meanwhile, the Joint Revenue Board, formerly the Joint Tax Board, has issued a communique at the end of its 158th meeting held recently in Abuja. Ejura Etu Okpanachi again reports.
Meeting under the theme, which is Managing Transition, Driving Transformation, Building the Future of Tax Administration in Nigeria, the board commended the federal government's ongoing tax reform, citing improved revenue mobilization and ease of doing business. The JRB welcomed its transition into a joint revenue board, describing it as a major step towards a more coordinated and efficient national revenue system. The board reaffirmed the abolition of illegal roadblocks and road stickers, called for stronger data sharing among tax authorities, and urged states to fast-track the harmonized taxes and levies. The communique reflects a shared commitment to a simpler, fairer, and more harmonized tax system across Nigeria.
The Nigeria Revenue Service, NRS, has issued a clarification on the Memorandum of Understanding, MOU, signed with France, following public discussions and online commentary. According to the service, the agreement is a standard international cooperation framework focused strictly on technical assistance and capacity building, and does not in any way compromise Nigeria's sovereignty or control over its tax systems. Aisha Abdulkader has the reports.
NRS explained that the MOU does not grant France access to Nigerian taxpayer data, digital platforms, or operational infrastructure. All Nigerian laws on data protection, cybersecurity, and national security remain fully applicable and enforced. The service stressed that safeguarding taxpayer information remains a top priority, noting that similar agreements are common among tax authorities worldwide to promote knowledge exchange and global best practices. The service also dismissed concerns that the partnership would sideline local technology providers, reaffirming its continued collaboration with Nigerian innovators and institutions. It added that the MOU is advisory and non-intrusive, limited to knowledge sharing, institutional strengthening, workforce development, and policy guidance. NRS reaffirmed its commitment to transparency, professionalism, and reforms aimed at building a modern, efficient, and globally competitive tax administration for Nigeria.
And that wraps up the news. Let's now join Mariam on the Vox Pop segment.
Hello and welcome to the segment. My name is Mariam Julde Adura and we're still in Yola, the Adamawa State capital. Today we'll be discussing penalties for failing to file VAT returns under the new tax law. Come. Under the new tax law, what is the penalty for failing to file VAT returns?
Failing to file VAT returns, it has a penalty of 50,000 for the first month, and any subsequent month you still fail to file your tax returns, it attracts a fine of 25,000 for any subsequent month.
Under the new tax law, every VATable person must pay his or her VAT tax at 7.5%, and failure to do that attracts a fine of 50,000 naira for the first month of default, while 25,000 naira for the subsequent month of default. Thank you.
Under the new tax law, penalty to file the account is 100,000. Then subsequent month is 50,000. Additionally, if you did not keep proper records, you will be liable to pay a fine again of 50,000 naira. So it's better you keep good record of your VAT receipt.
Okay, is this irrespective of those who are liable to pay tax? You know, there are some companies that have been exempted from paying tax. So is this, does this also include them?
No, it does not include them. Is when there is the people is the one that normally pay their returns every month that is liable. Then if you know you have registered, your company have commenced without you paying the VAT, you're also liable to pay the 50,000 naira again.
According to the new tax law that will be taking effect on 1st January 2026, failure to file VAT return for the first month will attract a penalty of 100,000 naira and 50,000 naira for subsequent months.
Is this irrespective of those companies exempted from paying tax?
Yeah, that's those companies that are engaged in VATable items. Those are those companies that will be charged the penalty as far as the VAT is concerned.
Under the new tax law, what is the penalty for failing to file VAT returns?
Okay, under the new tax law, the failure to file VAT returns attracts the penalty of 100,000 naira and 50,000 naira for the subsequent months that follows. Yes.
Is this irrespective of those who are exempt from paying tax?
Yes, because even if you don't pay tax, you have to file. You have to file your returns. Then, and for those companies that don't keep records, they also have the fine of 50,000 naira to pay.
As 2025 ends, Nigeria celebrates you, the taxpayers who kept our nation moving forward. Your dedication built schools, hospitals, roads, and created opportunities for millions. Every naira you contributed strengthened the foundation of progress. Now, we step into 2026 with a new vision. The Federal Inland Revenue Service evolves into the Nigeria Revenue Service, NRS, stronger, smarter, and more committed to serving you better. This transition marks a future of innovation, transparency, and prosperity. Keep paying your tax. Keep building Nigeria. Together, we rise. Together, we prosper.
Did you know a taxable person who fails or refuses to file VAT returns or files incomplete or inaccurate returns with the relevant tax authority is subject to a clear administrative penalty? For more information, please visit www.nrs.gov.ng.
Ashu Abe takes us on the Knowledge Zone.
Hello and welcome to Knowledge Zone, where we dive deeper into interesting conversations had on the streets. I remain your host, Ashu Abe. On today's episode, we'll be talking about the penalty for failing to file your VAT returns under the new tax law. Under the new tax law, a taxable person who fails or refuses to file VAT returns or files incomplete or inaccurate returns with the relevant tax authority is subject to a clear administrative penalty regime. For such a failure, the Act imposes 100,000 naira for the first month in which he default occurs and 50,000 naira for each subsequent month the failure continues until the returns are properly filed. This applies to VAT returns as part of the broader requirements to file accurately and timely tax information. This penalty is designed to encourage not only timely filing, but also completeness and accuracy in tax reporting. In practice, continued failure to file VAT returns exposes a taxpayer to escalating monthly fines, which can accumulate rapidly over time, stressing the importance of establishing robust compliance processes for VAT. Over to you, Lorraine.
And now to our Professional Insight segment.
As the Special Advisor on Research and Statistics to the Executive Chairman of the FIRS, my role typically includes providing expert advice and recommendations to him on complex research and statistical matters. So also, my role involves collaborating with the chairman in integrating research activities into long-term plans and objectives of the FIRS so that his decisions will be based on evidence and not on assumptions. This process ensures that his decisions finally are carried out objectively, which in the long run will translate to enhanced revenue collections and tax administration in the nation. Furthermore, my role involves carrying out specialized projects and assignments as directed by the chairman. For instance, conducting feasibility studies, evaluating new initiatives, and researching specific tax-related issues. The Research and Statistics Department is one of the most fundamental departments in every organization, not only in the Federal Inland Revenue Service. They carry out important activities that are fundamental because that gets credibility and trust for the organization. My office works hand in hand with the RSD. We carry out a lot of activities together. First of all, the Research and Statistics Department ensures that the policies and strategies of the FIRS is grounded in reliable data. Now, when you have data that is valid and reliable, and you apply correct research techniques and statistical tools to analyze such data, what you get is reliable research findings. When you give management reliable research findings, they make informed decisions based on empirical evidence and not based on assumptions or guesswork. So these are the type of things that the department do in order to drive data-driven decision-making in the service. Secondly, a lot of research activities is going on in the department. For instance, they are investigating issues dealing with compliance, non-compliance trends, gender diversity and compliance issues, revenue leakages, debt recovery issues, tax behavior issues, tax education issues, tax reforms issues, tax laws and reforms issues, and a host of others that are too numerous to mention here. The only thing is that it takes some time to carry out original research and provide original results because of the rigorous nature of the processes. So also, the Research and Statistics Department have called for internal collaboration with other departments in the service, and they have answered the call. Departments, functions have submitted their proposals. Field offices have joined, they have brought in their proposals. The department is working with many departments such as the Fiscal Transformation and Implementation Division, the Debt Management Department, the Tax Data Management Department, the Competent Authority Department, the Safety and Fleets Department, the Building and Facility Department, and a lot of field offices have shown their interest in carrying out this research with the RSD. They have sent in their proposals. They are collaborating with the RSD in providing evidence-based solutions to lingering problems. So for me, this is a step forward for the FIRS because departments, functions, and field offices have realized the need and importance of conducting research and making decisions based on evidence. And this will, in the long run, make a huge difference in the way we conduct our activities in the service, and then definitely it will translate to better tax administration, which will consequently create better revenue collection for the nation. Okay, the Research and Statistics Department applies predictive modeling tools to forecast revenue trends. It is also trying to get the most modern or latest predictive tools for its forecasting use. So what the department is doing is that it is carrying out serious trainings for its staff on data analytics so that they will be able to analyze data rigorously and apply it on the day-to-day activities of research in the department. Through its division of internal collaboration, the department has been partnering with a lot of international organizations like the ATAF, the IMF, the ICTD, the UNDP, the World Bank, and many others, leveraging diverse skills, sharing knowledge, expertise, resources, and having different perspectives on how to do this in order to improve output for the service. The department is also leveraging digital tools in making sure that research outputs are original. How do they do that? We use online materials, we use the AI, to get materials, original research materials. But we do not accept AI-generated papers. What we do is to ensure that the ethics and integrity of research is upheld. So AI is not an end to itself, but a means to an end. So we only use AI to guide us, and then we do the right thing, but we ensure that we carry out original researches in the department. And then at the end of the day, the results that we have, we share it internally so that all departments across the divisions will be able to get them. And then we ensure that selected researches that are not confidential for this of the service are being shared with taxpayers, business groups, civil society, to create legitimacy and trust for the service. So the department has been doing a lot of, researches around that. The research department is doing a lot of work under its director with the support of the CD Corporate Service Group, a lot of support from the Chief of Staff, and support from the Chief Economic Advisor. The Executive Chairman of the FIRS himself, Dr. Sak Adedeji, is a researcher. He knows the value of making evidence-based decisions. And with the Nigeria Revenue Service in our minds, he has shown tremendous support to uphold research in the service because he knows that research and development goes hand in hand. The Research and Statistics Department is thinking ahead. It is thinking of ways it will deepen its data collection and management by getting real-time access to data. The department is also trying to get modern predictive tools so that it will be able to predict forecasting trends using modern predictive tools and econometrics tools. The department has been carrying out trainings for its staff so that in the long run, it will be able to carry out research activities, for instance, on tax reforms, and then be able to apply these predictive modeling tools to model the revenue impact of new tax reforms before they are even introduced. The department will be able to do it with management support. The department has been collaborating with academic institutions, research institutions, and partnering externally with them through the FIRS Journal of Tax Studies, and then sharing these outputs, as we said, with civil society, students, taxpayers, policymakers, and others. It is also making sure that whatever we get is sent to the management and is also shared internally with staff in the organization for them to make appropriate informed decisions in their operations.
As 2025 dey waka go finish, we hail una taxpayers wey stand gidigba for Nigeria. Na una money build school, hospital, road and give better chance for plenty people. Una dey make progress real. Now, as 2026 don show, new chapter don start. FIRS don change to Nigeria Revenue Service (NRS). Na better move wey go make tax matter easy, clear and sharp. NRS go dey stronger, smarter and ready to serve una well. Abeg, continue to dey pay your tax. Na so we go take build Nigeria together. Together we rise. Together we prosper.
Over to Swateku for what's on the net.
Good day and welcome to What's on the Net. My name is Joyce Swateku. The dot read says, "What if I'm old enough to be taxable but no job? Any way out, please?" At the dot, if you are old enough to be taxed but do not have a job or any source of income, then you are not required to pay tax. In Nigeria, tax is based on earnings, not age. You only become a taxable person when you start earning money through a job, a business, or any activity that brings in income. At Lawrence is asking, will the rent paid to landlord be taxed? Yes, rent paid to a landlord can be taxed, but the tax is not paid by the tenant. It is the landlord who is taxed on the income they earn from rent. This tax is called withholding tax, and it is deducted from the rent and remitted to the tax authority. So, tenants do not pay any extra tax on rent. The landlord simply pays the tax on the rental income they receive. Over to you, Laurie.
And that's a wrap on this episode of Tax File. I hope you are living with fresh knowledge and a stronger grasp of today's tax realities. Remember, the conversation doesn't end here. Follow us on social media to share your views or drop your questions. We are always here to keep the tax talk going and make sure you are in the know. Until next time, I am Laurie Bala Hassan. Stay curious, stay compliant, and keep it locked on Tax File.